Hi, this is Jason Hutt from Bracewell's Environmental Strategies Group, joined today by my partners, Christine Wyman and Elizabeth McGinley. And this is the 5th installment of the Environmental Seminar Series. Today, we're going to talk about carbon capture and underground sequestration, CCUS. It's popularly been acronymized. So what we'd like to do today, I think, is just have a general discussion about what exactly that is and how it's evolving under the policy and regulatory developments in Washington, D.C., and then talk a little bit about where things may head in light of the election results and the incoming Biden administration. So with that, I'll tee it up with a question to you, Liz, just to kind of frame for us the discussion of what exactly CCUS is and explain it in its different forms so that people have a general understanding, because people are sort of coming at this from different places on the learning curve.
Great, thanks, Jason. So as Jason said, the acronym we use is CCUS. That stands for Carbon Capture, Utilization, and Storage. So let's kind of unpack that. First, let's focus on the carbon capture piece. Carbon capture is generally the technology for capturing carbon from an industrial source or the ambient air to avoid having it go out and retained in the environment, which could lead to issues with respect to climate change. So typically the carbon capture equipment is associated with an industrial facility or a manufacturing facility, so is able to capture the CO2 emissions from that facility. There is also technology available whereby carbon capture equipment will pull in ambient air and is able to extract the CO2 and store it within the equipment. So there are two really different types of technologies and approaches to that capture. And then the utilization or storage is either you take that CO2 and you utilize it in a process, such as growing algae, or you use it in the production of a product, such as fertilizers or cement. You can use it to inject into oil and gas wells through tertiary recovery to enhance oil production. That's called enhanced oil recovery, or EOR. Or alternatively, you can merely store the CO2, and we refer to that as secure geological storage. That's generally storage in deep underground formations that have the appropriate geology to store that CO2 safely below the storage and avoid leakage. CCUS is really viewed as a very important part of combating climate change, and is really a complement to the use of renewable energy. A lot of people feel that we're not going to be able to meet the carbon neutral goals that a lot of companies have set for themselves by merely focusing on renewable energy. And that's particularly true in the area of heavy industry, things like the production of steel, cement, and fertilizers, which is really very difficult to do by relying solely on renewable power. So if you're still going to be using fossil fuels for that process, there is an ability to capture the CO2 emitted when you're using fossil fuels for that process. And sometimes in the process, there's another opportunity to capture CO2 in the process, such as when you're producing cement. Another really important application for CCUS is in the hydrogen production context. There are many methods for producing hydrogen. Probably the two we're hearing the most about right now is green hydrogen and blue hydrogen. Green hydrogen is when you use electricity from renewable sources, so like wind and solar, to electrolyze water to create hydrogen. That is very clean. That is considered a very clean source of hydrogen. But another less expensive source of hydrogen is what we call blue hydrogen. And blue hydrogen produces hydrogen from natural gas, which is obviously very prevalent in the United States, through a process called steam method reforming to produce hydrogen. Now, CO2 is produced in that process. So if you're able to add to that process carbon capture facilities and remove the carbon dioxide emissions that happen through the process, it makes that hydrogen production much greener than if you use the fossil fuels without the carbon capture. So that's another very important way people are looking at utilizing carbon capture equipment to reach carbon neutral goals.
So building on what Liz just said in respect to the hydrogen aspect, I just want to point out another application for the use of carbon capture and storage in the hydrogen world as it relates to green hydrogen, and that's in the use of renewable natural gas to produce renewable hydrogen or green hydrogen. So renewable natural gas is methane that is captured from a waste stream like a landfill or animal facilities, things like that. That methane that would be released into the atmosphere is captured, it is purified, and then it is considered pipeline quality gas. So you can use that renewable natural gas to produce hydrogen. You actually get negative emissions associated with that when you compare it to the methane that would actually be released into the atmosphere anyway. And then if you put carbon capture on the production of hydrogen from that renewable natural gas, you have an even better emissions profile. So it's another opportunity to make green hydrogen, and carbon capture can play a big role in that.
So since there's not a market value to the sequestration of the carbon, this is an expensive technology, or these different methods of sequestration or storage are expensive, and in order to sort of facilitate enthusiasm for using it, the policymakers in Washington have used the U.S. tax code to establish a value for that. And I failed to introduce Liz at the beginning of the discussion as the head of our tax department at Bracewell, but this will be a challenging question for her, in the sense that we're going to ask her as a tax lawyer to explain to an audience of non-tax lawyers how Section 45Q, which was enacted back in 2008 and expanded by the Bipartisan Budget Act of 2018, how that works to incentivize the development and implementation of these technologies, and frankly, what questions it leaves open for people to be thinking about as they determine, whether and how to approach the benefits of the tax incentive.
Great, thanks, Jason. So as Jason said, Section 45Q is a federal tax credit. So it's a dollar for dollar offset against a taxpayer's tax liability that was expanded in 2018 to be more comprehensive and a higher credit. What the credit is paid upon is metric tons of carbon oxide that are captured that would otherwise be released into the atmosphere. So that is the basis for it. It is granted to a taxpayer that uses carbon capture equipment. So what is carbon capture equipment? It's basically equipment to capture or process CO2 until it is transported. So any long haul pipeline would not be included, but generally the equipment prior to that point would be included as carbon capture equipment. And you have to use it to capture what's called qualified carbon oxide, and we'll talk about what that is. It's generally carbon dioxide produced from an industrial source, or, as I said before, gathered from the ambient air. And that taxpayer also must physically or contractually ensure the injection, utilization, or storage of that CO2. So those are the multiple destinations for the CO2 that I was talking about earlier. So you need to capture this CO2. What's a qualified facility if you're capturing it from an industrial source? So what is that? One very important limitation at the moment under the code is a qualified facility must begin construction before January 1, 2024. So that's really important. So let's pause on that for a moment. What does it mean, start of construction by 2024? Because that's rapidly approaching, especially if you're talking about a massive multi-billion-dollar project for the capture and utilization or storage of CO2. Well, start of construction is very similar to what some of you may be familiar with respect to the credits in the wind and solar space. Very similar rules have been adopted for start of construction for 45Q. It is really, you have to show that there has either been physical work of a significant nature, or the safe harbor is you have incurred 5% of total cost. And in either case, you also have to show continuous efforts until completion. So the first test, which I think is generally relied on more often, establishing for work of a significant nature, that is a very broad statement. It can include ordering very bespoke equipment, not something that a supplier would hold in inventory, but customized equipment. It can be building foundations, but it doesn't include some intangible things like permitting or research. But if you're interested in this topic, I'd be very happy to talk to people about the great detail as to how you establish start of construction, because that's a big issue for people, because that's coming up close on the horizon. And there's also, for a qualified facility, must produce capture minimum amounts of CO2, and there are detailed rules around that we won't get into today. So then the credit, as I said, is available for 12 years after you place the facility into service. And the credits are available at two different levels. The credits generally are scheduled in the code, and they increase each year between 2017 and 2026. And after 2026, they continue to increase, although not described in detail in the code, but through inflation adjustments for each year thereafter. Well, how much are these credits? Well, this is, again, as I said, are based on metric tons captured. And for, if you're going to capture and store the CO2, it's $22.66 of credit in 2017, ramping all the way up to $50 per metric ton in 2026. And there is a lesser credit available if you're going to capture the carbon and either use it or inject it in the EOR process. And the reason for the lesser credit is that they're assuming there's some other revenue source, hopefully, in selling this CO2 for EOR or for use in another process. Or perhaps you're using it yourself in creating a product. And that credit spans from, in 2017, $12.83 up to $35 in 2026. That's the maximum credit. Now, something important. I'm sorry, Jason.
Well, let me just interrupt you, because as the non-tax person, as I hear what you're saying, I just want to be sure I understand it. So when you say the credit is available, that means that the act of sequestration or storage occurring in that year generates a tax credit of the value that's associated with the escalating scale. So it's the facility has the ability to generate those credits in those years, and the value of the credit that it generates changes over time.
That's correct. That's correct. It's the credit available is always multiplied by the metric tons that are captured and either stored or used. And then you multiply it by the rate available in that year. That's exactly right. So let's talk about how that works in the case of secure geological storage. So you're capturing the CO2 and you're going to securely store it. In that case, you need to obtain a permit under the EPA rules to establish that you have placed that CO2 in secure geological storage. And that is Jason's world and our colleague Jeff Homestead's world, who understand all the requirements around secure geological storage and the permitting. But something that's very important in that context that I want everybody to realize is there is a recapture of the credit, or potential recapture of the credit, if there is ever any leakage from that secure geological storage. And what's good to know is the recapture risk only extends 5 years beyond the last year that you claim the credit, and it is based on net leakage in that year. So if your project is still storing CO2 in those years, you only look to the net leakage. That is, if the leakage in that year exceeds the amount that you've captured and stored in that year. And the way you compute the recapture of the credits is you do it on what's called a LIFO basis, or last in, first out. You recapture your last credits first and go backwards. So you're recapturing the highest value credit first and going backwards, which is unfortunate. There is an ability for those who are concerned about the recapture risk to seek insurance for the recapture risk. There are insurers out there that are very familiar with these rules, very familiar with the recapture risk, how it's computed, how it's identified, and there are insurers out there that will provide coverage in the event that there is leakage and recapture from your facility. So we'll turn them to a moment to carbon. Yes.
I would just to comment on the insurance piece too. So there are policies out there that are being developed. One of the questions is that most insurance policies have a 10-year outlook. And so the insurance industry is having to sort of stretch itself to think about how to deal with this, a 12 or even 15-year program, right? Because I think there's even a tail on the recapture part after the 12 years.
And then 5, assuming you obtain the credit for 12 years, it would extend 5 years after the last year you claim the credit.
Right. So it's out there, but it's, I think, nascent is probably a good word to use in association with it.
Yes. And guidance with respect to these credits has been rolling out over time. As I said, the statute was amended in February of 2018. Last spring, extensive proposed regulations came out, which provided a lot of guidance, but we're still waiting for more guidance. And that leads me to my next topic, which is obtaining these credits when you're utilizing the CO2 in some process or product. The credit's a little bit more complicated there, because in order to figure out how much CO2 you are preventing from escaping out into the atmosphere, you need to conduct something called life cycle analysis. People also refer to it as LCA. And I will describe it very generally as that this falls into the realm of my environmental colleagues, because it's very complicated. But that generally is a concept of measuring from the time you're capturing the CO2 all the way through the process you're using it or the product that you're storing it in, how much net CO2 is captured and stored in that process or through that product. And that is a very, very complicated analysis. We are still waiting for regulations to be issued on that topic. The last time regulations were issued, they reserved on that topic. That may come out by the end of 2020. We're not certain. It's certainly a very big task, but we will be watching for it very, very closely. So while I'm on that topic of what might happen on 45Q in terms of future guidance, we think we may see some guidance through the end of the year. As I said, some people have asked if, as part of what they're hearing about this extenders effort, whether we may see a bill to push out the date for start of construction, because it's creeping up very quickly. And what's interesting, what makes it a little bit challenging, is that the extension of the start of construction for this credit wouldn't typically be part of a general reading of an extenders package. It would not fall into that category. So it does not seem likely that the extension of the start of construction date would be part of an extenders package by the end of this year. It's not impossible, but it doesn't seem likely to be included. But we do think that the extension of that start of construction date, some have said maybe 5 years, some have said it indefinitely, could be on the table. And also people have talked about the possibility of converting the credit into just a cash grant, as was done with some of the renewable credits. That is a big step, and that's a big undertaking, but that could happen. So just wrapping up here, I just touched on the point that some people are advocating not just for a tax credit, but a cash grant if you perform this carbon capture utilization or storage. Why would people ask for that? The reason they would ask for that is some of these taxpayers who will own this carbon capture equipment and meet all of these requirements that I just described may not be taxpayers, so they wouldn't really be interested in the credits. It doesn't have an economic benefit to them. And they may not be taxpayers because they may have a tremendous amount of development that's going on, and they're able to expense that development as it goes into service, which generates huge deductions so that they're generating losses or carrying forward losses so that the credits aren't valuable to them. What do you do in that case? Is it just a loss? No, it's not just a loss. The regulations provide that the taxpayer that owns the carbon capture equipment has the ability to transfer those credits to another taxpayer that is storing, utilizing, or injecting the carbon oxide. So there is a limited ability to transfer those credits. There is another very important way to monetize those credits, and that is to hold the project in a partnership. So the partnership generates those credits, and you bring in what's called a tax equity investor who makes an investment in that project and therefore is going to be able to be allocated some of those credits for tax purposes. Some of you may be familiar with tax equity investments that were made in the wind and solar space. I can generally say that this is similar, and there are similar structural concerns, but very generally, the allocation of credits has to follow the economic interest in the partnership. So with that, hopefully, Jason, I didn't get too deeply into the technical tax aspects that can happen when I get rolling, but really want people to understand that this credit is economic support for these projects and does not have to be utilized by the taxpayer, but there are ways to monetize it by transferring it or utilizing it in a tax equity structure.
Well, I want to applaud how simple that was, at least for me to understand. So thank you for going through it that way. Let's jump back. So there's one piece of this, I think, as environmental lawyers in the audience, and I think about the life cycle analysis. And I know there's just so little out there on this, but this is one of the questions that folks in the audience are likely to get as their companies contemplate whether CCUS is something that they should be interested in. How will they approach the life cycle analysis? And Christine, I'll ask for your thoughts on this too. But there is an ISO standard out there. How it actually applies in the context of carbon, we don't know. I suspect that, as you sort of flag, if you're talking about entraining carbon in a product, that the scope of that life cycle analysis from cradle to grave will be a very key question, because you won't know how much to take into consideration what happens at the point of destruction of that product, and whether that carbon is reintroduced into the atmosphere or introduced for the first time. So those would be very important questions that would need to be answered to some degree on the front end to know whether or not one wants to make the investment to try to qualify for the credit. And ultimately, it seems to me that in the absence of more guidance coming out from the next administration, or at the tail end of this administration, we're going to be in a process of making submissions to the government and hearing their response, getting an indication as to their receptiveness as to whether that life cycle analysis is going to be sufficient. Probably some of the ways in which one can bolster that are by hewing to the ISO standard, and I would say second, using a third party, an independent third party, to sort of assist you with that analysis and add sort of some additional credibility to the analysis, because they may not have the same interest at stake that you might otherwise have. But Christine, I wanted to know what you're hearing and thinking about with respect to LCA too.
Sure. No, I think that you've raised a lot of the big questions that people have regarding the LCA. I mean, obviously, we have, the limited information that was provided over the summer by Treasury, that it has to be in writing, that it pings to the ISO standard, and that you have to have like a third-party verifier or an auditor conduct the LCA. But I think one of the interesting things is that The statute actually defines the LCA in terms of the renewable fuel standard definition. And that is a program that EPA has a very, very long history of and knows very well how to implement an LCA. And that LCA is very detailed, very robust, and very comprehensive. So I think that's one thing to keep in mind as companies are considering embarking on this utilization aspect of 45Q is to what that LCA might look like and the resources that might need to go in to standing up that LCA, because I think it is going to have to be a rather robust document, and that's what they're going to be looking for. The other question is, you know, as you mentioned, we're going to be submitting this to IRS, DOE, and EPA is going to have a role in approving the LCA. It's described as a technical review at this point. So that suggests something that is more than just a check the box type approach to the LCA. The amount of utilization that a taxpayer is going to be able to claim is going to depend a lot on the baselines and assumptions that are going into that LCA. And there's a lot of subjectivity there, despite the fact that there's an ISO standard on this. And so, you know, those assumptions and, you know, subjective determinations look like they could be, you know, validated by EPA, possibly second guessed. And so there's, you know, that level of review and that how far into the weeds and the details that EPA is going to dig into these is an open question that also has implications on timing, right? I mean, how long is it going to take EPA to dig into these and approve them? Because in the RFS world, if anybody's working in that, you know that it can take, you know, years to have some of these pathway petitions approved based on the life cycle analysis. And so, you know, those are things I think that are just still fully open questions. They maybe support the idea of extending the 45Q construction date even farther out. So
I think another question, because there's no blueprint for how to do it, you know, people are trying to decide whether they should be the first to try it, or whether they should be, you know, in the copycat position. And if they're in the copycat position, will they be able to get access to the submissions that other submitters make so that they can see it? And there's not clarity as to how transparent or sort of FOIA-able that those submissions will be, or whether those can be protected under trade secret or business confidentiality protections. So all of that remains to be seen, but parties determining whether or not they want to make the investment to go into that process have to think through those questions to decide, you know, when is it right for them to undertake the effort. So let me shift from the tax piece, which Liz has very kindly sort of set the stage for where is the economic incentive to do this, and that comes through the tax code, to what are some of the other sort of key compliance and permitting and liability questions that someone who's contemplating a 45Q type of project are likely to get. And I think some of these will fall inevitably to the environmental lawyers, both in-house and outside. But certainly in a sequestration project, so going back to the sort of the classic, I think, CCUS project, you have questions related to the ownership of the subsurface geologic pore space, because it's not like a mineral right. The pore space itself generally belongs to the surface owner. Mineral rights, of course, can be separated from that estate, and so that needs to be navigated in terms of ensuring that you own a sufficient amount of the pore space into which an injection project would go. Obviously, there's added complexity if you wanted to build or design and build a project on public lands as well. The second piece of it is there would be a key permit, right? This is a form of underground injection control. So it's, as I think many know, that is an EPA program that can be delegated to the state. So under the Safe Drinking Water Act, Section 1421 prohibits the underground injection into wells except when authorized by a rule or a permit. There's 6 classes of injection. Sequestration wells are Class 6 wells. They require a heightened degree of scrutiny as to establishing the integrity of the geologic formation into which the injection is going to occur, because it's a relatively high pressure injection and there's not an anticipated recovery, except in the enhanced oil recovery example that Liz talked about earlier, but there's not an anticipation of a recovery component. So going through the steps to geologically prove that up is is a heightened bar to achieve. And so there's more stringent requirements related to permitting and siting, construction, operations, monitoring, even the plugging and the post-injection site care have a different sort of threshold that one needs to get to. Like any other underground injection control well, there's a financial insurance component to cover corrective actions, the well plugging, the post-injection. So that's another piece that has to be put in place in order to process one of these permits. I think sort of interestingly, because the 45Q was put in place to facilitate a shift in movement towards this effort, but many of the permitting programs under the UIC program, while many programs have been delegated to the states, because states have tried to put under their umbrella the permit programs that the regulated community was using with some frequency, most states just haven't focused on Class 6 underground injection control well, the permitting program. So only 2 states at this point, North Dakota and Wyoming, have received the primacy for the Class 6 wells. Louisiana has initiated some discussions with EPA and expressed an intent to move forward. But primarily, this is a permitting program that still rests with EPA in most states. And EPA itself has very little experience with actually issuing Class 6 underground injection control permits. I think there are only, as to my knowledge, there are only 2 that are out there right now, and both are for projects in Illinois. So that's the underground injection control program at the federal level, sort of the environmental piece, as well as the mineral rights piece or the pore space. State laws also, so states all have their own oil and gas rules about that could govern an underground injection control well that is used for the sequestration of carbon. But the target reservoir, just generally the target reservoir has to be, if it's intended for sequestration, there has to also for the state be in demonstration of suitability for the storage purpose. You have to usually show that the reservoir is not producing native mineral substances, right, because they don't want something coming out at the same time as something is going into the geology. So those are requirements and hurdles that a project like a sequestration project would have to navigate. So that's the compliance piece as I think about it. Separately, there's all of the commercial agreement considerations that are going to go into this. So as Liz sort of highlighted, it may not be the party who's creating the project for sequestration that necessarily wants to harvest the credits that are being generated by that. And so you could have a tax equity investor who's involved. You're likely to have an insurance party who's involved. And all of those parties commercially are going to need access and inspection rights to be sure that they're sort of diligencing the project that you may or your company may be putting together. Installation access, inspection access. They want to be sure that if the capturer's equipment is located at the emitter's facility, and those are 2 different parties, then there's a commercial agreement that has to be put in place there. But again, all of the steps to confirm the validity of the credit that's being generated, and then to monitor for the leakage to determine that you don't have a heightened recapture risk, are going to require commercial terms and conditions as between the parties. Likely there will be reports, certifications, testing results. All of those components are going to be mixed into the commercial agreements that have to be put together. And again, going back to my comment about, well, if you're one of the first market entrants, is everyone else going to be able to copy what you do and the risk that you take in doing that? I think there's going to be a lot of confidentiality and trade secret protection provisions that go around these types of documents for people to protect that. Liz mentioned that there's talk about a cash grant that may be a different form of incentive, and often when you cost share with the government or you get money from the government like that up front, there are reciprocal obligations that come with it. Typically, the government, or in many cases, the government is looking for sort of the R&D, right? They want to benefit from what you learn as you do that project. And so there are also access and inspection and reporting and certification obligations that often accompany a grant like that, or grant reporting, at a government grant reporting. So you can expect that you may confront some of those questions. So that's sort of how we've been thinking about the outline of issues that environmental lawyers are apt to be asked to address as CCUS takes root and people come to better understand 45Q and how it's going to work. So let's go from there maybe next, and I'll go back to you, Liz, to at least put this question out, because I know as a tax lawyer, you're probably on the very front end of figuring out how do you structure these things, and how do you borrow from what you've learned in the renewable space on tax equity investment, but who's actually doing these projects so far, and what projects exist in the world today so that people have a sense of, well, has anyone actually brought this to fruition?
Yeah, thanks, Jason. There are some very interesting projects. Actually, the carbon capture for EOR really started some time ago, and probably the most notable project that people are aware of, it's called the Petronova facility. That was a joint venture between NRG and Nippon Oil to fit a coal burning plant in Texas with carbon capture equipment, capture the CO2, and then utilize it for enhanced oil recovery. There were oil wells in the close vicinity, so there wasn't a lot of issue of transport. The plant was there, they were capturing the CO2 and using it for EOR. Some interesting points about that project were that these, as I said before, these projects are expensive to develop. It relied on DOE loans and a loan from the Japanese government. And it was really viewed as proof that the project process not only works, but could be successful. However, you may have heard that this project was shuttered in 2020. But that is mainly due to oil prices at the time and whether the project was still economic. And what's an important point to know is that that project did not rely on Section 45Q credit. So it was kind of a different economic structure. And the lawyer that represented NRG in that process is with us now, Danielle Varnell. She's a fantastic lawyer in our Washington office, and she knows all the details around that project and could really very effectively advise on a very similar project that people are looking at. There are also projects in the Gulf, particularly where our environmental lawyers are heavily engaged in the Class 6 permitting for them, where what they are doing is they are setting up, and it's not only in the southeast, but it's been prevalent there. What they are doing is setting up very large storage facilities. So they are seeking the permits and developing the secure geological storage, and will intend to enter into contracts with many industrial entities, power plants, refiners in the area that exist down there in the southeast, to allow them to capture their CO2 and then ship it and then store it in kind of a broad storage facility, and that entity would also provide storage related services. Something else that's interesting is we're seeing carbon capture become part of biofuels projects to the extent that in the biofuels process, the CO2 can be captured and stored. That also increases the environmental, lowers the environmental footprint of the project. And also in some of those cases where it's solid waste disposal, qualifies solid waste disposal facility, there may be the opportunity to get financing for those projects in the form of tax exempt financing. Now, tax exempt financing and credits on the federal income tax side can run into some issues. So you have to be very careful how you structure that. But that's something else that we see gaining momentum. Also, this is not something that is strictly in the United States. I've been very focused on the U.S. Projects and the availability of credits in the United States. But this is something that's also happening in the UK. There's a project called the Northern Endurance Partnership, which are two projects in the north of England that would capture carbon dioxide from a cluster of industrial producers. There are the Teesside project that involves BP, Eni, Equinor, and Shell. The Humber project that's very similar with Equinor, National Grid, and Drax. So you can see some of the really big players are very interested in expanding this space and investing in this space. There's another project in Scotland called the Acorn Project, in which Bracewell is involved, and that involves capturing carbon dioxide from the St. Fergus terminal and using that gas in pipelines to transport the CO2 to an offshore storage site. So you can see these projects take many, many different forms, very complicated process sometimes of the carbon capture, then the transport, then the storage or delivery to an off-taker. There are some challenges in the UK that are less significant here. That is a relative decline in heavy industry in the UK, and also some challenges where the CO2 production is distant from ideal storage facilities. In the United States, we have better overlap in proximity between where we are producing kind of the majority of our CO2 emissions and the opportunities for storage. So you can see from that list, Bracewell has a lot of experience directly working in these projects, understand what it takes to bring them together, and understand the different financing sources, which can be everything from government financing in the form of DOE loans to tax credits to private equity investment, or bank investment. It's a wide scale of possible investors.
So the international drivers seems like the big oil and gas companies who have made significant carbon commitments over the next couple of decades. Domestically, in addition to that, we see the utilities making very significant carbon reduction or carbon neutral commitments. And so maybe Christine, you could add your perspective about what's happening there on the R&D side, and maybe other technologies that you're seeing people look at, particularly with your Washington perspective, and listening on the Hill and the executive agencies about who's trying to push the different types of technologies forward.
Yeah, thanks, Jason. So I think the power sector is really a great example. So in the absence of some sort of federal mandate or requirement to reduce their carbon footprint, even though they have a lot of spotlight on them, almost all the utilities have pretty significant and aggressive decarbonization strategies themselves that they have committed to. And those strategies really look at what the generation mix is and what the load will be. And they've come up with some solutions for how to actually get to a glide path to a decarbonized state. A lot of those glide paths, though, are predicated on this idea that there will be carbon capture technology available for natural gas power generation, and that it will be economical, commercially deployable, and really kind of readily used. And so they are taking these commitments to heart, and they are investing in R&D to make sure that they're doing what they can to ensure that the technology is there when they need it. And so I think a good example is the National Carbon Capture Center, which is a DOE-sponsored research facility that's then managed and operated by the Southern Company. So the purpose here is really to accelerate the commercialization of carbon capture technology to reduce the greenhouse gas footprint associated with fossil fuel power plants. And over the life of the facility, they've decreased the cost of carbon capture technology by 1/3, which is a pretty significant amount to have reached in this amount of time. They've looked at about 60 different advanced technologies. Just in the past few months, they've gotten 2 new awards from DOE to do new research. One is a $3.1 million partnership on direct air capture, and it would really actually seek to incorporate this concept of net negative emissions into the power sector model as well, recognizing that there's, we've already have so much CO2 in the atmosphere that we actually can't just capture, we actually have to start removing some as well. And the other one, they have a $4 million award for carbon capture testing on natural gas and coal flue gas. And this is just the idea too that, a lot of these power plants and these load serving power plants are going to need to continue to exist even in a renewables world. And they're doing what they can to make sure that they decrease or eliminate their carbon footprint.
So maybe I'll ask you a follow-up question. And this is a dangerous one when you're recording your presentation hours before it will actually be presented, because so much is changing in Washington so fast right now. But looking into your crystal ball, kind of talk about the obstacles development that people want to try to overcome through a dialogue in Washington, and how a Biden administration or the next Congress can incorporate policy or regulatory changes to try to overcome some of those obstacles as we head into the turn of the year?
Sure. So, why don't we focus on the obstacles first? Because, even though 45Q has really made great strides in bringing this technology more into a reality, there's still a lot of obstacles that have to overcome. And, I kind of put them I look at them in like 4 different buckets. The first is cost of implementation. Even with 45Q, and, it's a question whether or not you'll be eligible for 45Q, the cost of this technology is pretty steep. In addition, the energy resources that go into running the technology, as well as transporting the carbon to wherever it needs to go for EOR, storage, or utilization, that's a significant energy source too. So you're looking at really high costs. Even then, applying this technology can affect your baseline operation. So you can have decreased efficiency and productivity associated with the plant that you're putting the technology on. So you're further decreasing, your revenue stream there. Also, there's just more costs associated with these projects because they are riskier, and therefore a lot of times there's the financial returns, because the financial returns are riskier. Higher risk premiums are associated with these projects, which is additional resources and capital that have to be kind of generated to put forth these projects. And so the cost of implementation is still very, very real and needs to be dealt with. Second, we've got the transportation challenges. So as Liz mentioned, capturing the carbon is just one part of it. We then have to transport it to wherever it's going to be stored, utilized, and that's a real cost. So I mentioned the energy costs associated with compressing the CO2 and maintaining the pressure that would be needed to move the CO2 through the pipelines. That's a significant cost right there. In addition, the thinking right now is that you're going to need a whole new network of CO2 pipelines that would need to be built to transport the CO2, because the existing oil and gas pipeline infrastructure cannot be used for the CO2. There's challenges associated with potential impurities in the CO2 stream that not only would affect the quality of the CO2 at the end, but also have some real, environmental and safety challenges as well with them. And so it really has to be like a very pure stream. And so for that's just another aspect of the cost. And then there's this, the concern about building these pipelines, the permitting and resources that go into permitting a pipeline are pretty significant. You might not have as significant public opposition as you would have to like an oil or gas pipeline, but at the same time, there's going to be landowner concerns if you're building that pipeline through their land, as well as just the legitimate, permitting and resources, the resources that go into permitting these pipelines. Especially if you're looking at long linear infrastructure, that's going to be a lot of different agencies you're working with, the state and federal level, and that's a lot of time and money that you're going to be putting into that. Another type of obstacle is, what are we doing with this captured carbon? So geologic sequestration right now is not really seen as a barrier to CCS because we have enough of it. But there's, a significant group of people thinking that we need to have an alternative to that, right? Because we can't just put it underground forever and ever. And so there's a lot of interest in expanding what utilization means. EOR is definitely very widely used, but beyond that, there's a lot of discussions and research into how else we can use this captured carbon and really turn it into an economic or something that is a valuable product. One of the issues, though, is permanence. How do we make sure that whatever the CO2 is going into is permanent? Because otherwise, it's not really addressing the climate change issues that we have. But also, there's an issue that the CO2 molecule is a very low energy molecule. And to convert it to a fuel or some sort of chemical takes additional energy and other inputs. And so then again, you're having, additional money going into this. Depending on how the energy is produced, you could have additional carbon emissions associated with it that we need more carbon capture for, if you're looking at a life cycle here. And so there's a lot of challenges there. One of the primary ways that people are looking at utilization now is in construction materials, because you can use the CO2 in cement and aggregate and actually turn it into like a carbonate. You're replacing some of the other feedstocks that are going in. It's not as high energy that's required, and it is permanently sequestered in that product. And so that's something that people are looking at. The costs are really still pretty high, though, to incorporate this process into traditional production of these products. And so there's a lot of R&D looking at things there. And then I'd say the last bucket of obstacles is really public support here. So there's several different considerations that are at play. There's this idea that carbon capture is allowing the production and use of fossil fuels to continue, and there's a real divergence of opinion as to whether or not a clean energy economy can have fossil fuels supporting it. And so if you're supporting carbon capture, there's a thought that you're supporting the continuation of fossil fuels. There's concerns about the transportation of the CO2 and the build out of the pipeline infrastructure and what that means for resource impacts. And then I think too, we've been talking about carbon capture for a long time, and it's only been in the past few years that it's really become more of a reality. And so I think there's the public has a question as to whether or not this is real technology that can become commercially deployable. So I don't think that we fully have crossed the threshold there as to winning over the hearts and mind of the general public that this is something that can be a true part of a clean energy economy. Obviously there's some fundamental differences here about whether or not you want to support fossil fuels or not, and it's unlikely that carbon capture is going to overcome those. But some of the other things like public acceptance, I think, is something that can be overcome. But I'll say those challenges associated with the public support are playing out in the policy dialogues, even on the Hill. And you're seeing a lot of more conservative Republicans approaching and supporting carbon capture. More progressives of the Democratic wing are not as supportive of carbon capture and maybe only supportive of like a direct air capture. And so there's definitely, some differences of opinions as to how carbon capture can play a role in the future of our energy economy. So I think those are the obstacles that we're seeing. But Jason, you also teed up what comes next. And I think that's top of mind for a lot of people. And I mean, like I said, there's no doubt that CCS has been a huge part of the climate discussion over the last 4 years. And it really has been a way for a lot of more conservative policymakers to embrace the climate change discussion, being able to continue, not have to change positions, but say, we recognize that the climate is changing, and here are some technologies that we can support to allow our economy to continue and address the climate change issue. We also saw the Trump administration fully embrace CCS as a way to support their policies that were promoting domestic energy production and oil and gas and things like that. And so a lot of research and money was coming out of DOE to support carbon capture. And 45Q really made all of it a reality too. And so I think that just generated so much more interest and the ability for people to kind of support these carbon capture projects and research and policy developments. When we look at the next Congress and the next 4 years of the Biden administration, obviously we can't predict with certainty what's going to happen, but I think we can look at what has happened in the past and make some predictions as to what some directional predictions as to where we see the policy conversation going. And first, I'd say I think that we're going to see a tremendous more focus on direct air capture. Direct air capture, as Liz mentioned at the beginning, is this idea of taking the carbon out of the ambient air. So you're not associating the technology with a direct stream of CO2 emissions. You're more just pulling out the levels of CO2 that are in the atmosphere. So there's a little bit more comfort for those who are concerned about the continued use of fossil fuels, that direct air capture is really kind of fixing the climate change problem without, allowing fossil fuels to continue to be used. And they can kind of decouple their concerns with fossil fuel use with their support of CCS. Direct air capture, though, is very energy intensive, and the technology really is not nearly as advanced as traditional CCS. So that is a problem. But we do see a lot of support from the Democratic wing in Congress supporting that, as well as a lot of the stakeholders that are, I'd say, more aligned with the Biden administration. Their climate goals and their climate advocacy policies that they're putting forth for consideration by the Biden administration are really focused on direct air capture and making it more economical for projects. And so I'll mention a couple ways that they are encouraging the Biden administration to support CCS is through the Biden administration working with Congress to make direct air capture projects eligible for DOE loans, for them to be eligible for like master limited partnerships and private activity bonds, and as well as supporting some sort of like investment tax credit for direct air capture. I think it's notable that all these advocacy proposals, they do not have the same types of support for traditional carbon capture. It really is focused on direct air capture projects and making them more financially competitive with traditional carbon capture. I think the second area that we can expect to see some movement is just general bipartisan support for carbon capture research and development. We've already seen this coming out of the last Congress. Numerous bipartisan bills gained significant traction in the last couple of years, focused on DOE and EPA research and development programs for carbon capture, for direct air capture, for utilization of carbon. Things like the Use It Act, which provided EPA authority to create technology prizes for direct air capture and utilization. We have the Leading Act, which would provide DOE additional authorities and direction to create research and development programs specifically aligned with carbon capture for natural gas use in the power sector. And then there's the Effects Act, which really had a lot of different programs in it. Was introduced by Senator Manchin, who is the ranking member of the Senate Energy Committee and will remain there. Had coal and natural gas technology program, carbon storage validation program, carbon utilization, and carbon removal. So really kind of like a whole suite of comprehensive obstacles that he was trying to have DOE address in the carbon capture arena. We expect those types of programs to continue in the next Congress. All of that legislation, if it doesn't get caught up in the omnibus that they're considering at the moment, will have to be reintroduced next Congress. But I do expect that support will continue and will grow, and that R&D will be a consensus area that Democrats and Republicans in Congress can come together on in support of carbon capture. The other area that we could see is in the appropriation space. So DOE likely has the authority to do a lot of this on their own within their existing authorities and their R&D programs. However, what they don't have is the appropriations, the money to provide to these projects to help them move along. And so increased appropriations for carbon capture projects is something that we should be on the lookout for, and how it is aligning with some of the goals of both Congress as well as the administration in supporting carbon capture. And then I think the third thing to be on the lookout for is looking at more the logistics for carbon capture projects. So we focused a lot on the technology. How are we actually putting technology onto a CO2 stream and separating out the carbon associated with the other waste gas? But as we've talked, there's a lot of logistical issues associated with carbon capture and storage. You've got the source, you've got the transport, you've got the storage. Those are all individual players that have their own, their own interests, their own business models, and the policies and incentives that might provide, for one stakeholder to invest in carbon capture aren't necessarily the same incentives that are going to motivate or to provide the incentive for, CO2 pipeline transport development or storage. And so, policies that are really trying to be specific to the individual players that are within the CO2 value chain, I think is going to be something that people are looking at more, as well as really trying to map out where the connections need to be made. And here I'm thinking, within the states, there's already a lot of movements with regional MOUs and, other types of partnerships within states, normally in the Midwest, that are looking at where are the potential sources that carbon capture technology can be used to capture the technology, and then where are we trying to move that CO2 for? And they're actually modeling that out based on existing sources and how that CO2 could be moved across the country, so that they have more specifics about what the infrastructure looks like, who are the connections that need to be made, and what are the incentives for each of these players along the value chain to have them come to the table. I think it's interesting that the states are doing this because they do see the economic value associated with carbon capture, storage, and particularly probably utilization. And they're really trying to make it easier for these diverse stakeholders to come together to realize the potential for CCS and really, take it to the next step. So there's a lot of reports that are coming out recently that that really, map out these different connections and these different relationships that we're seeing being built. And I think that will serve the predicate for more specific policies that have the incentives that are aligned with the people along the value chain, as well as, eliminate some of the other obstacles that we're seeing with carbon capture. So.
It's a really fascinating topic because so many different facets of government regulation and programs have to come into alignment for this to take root, and tracking those different pieces and how they're coalescing over time has been really interesting to watch. But I want to thank Liz and Christine because in literally exactly 1 hour, I think you've helped us to cover soup to nuts, kind of what is it, how is it incentivized by the tax code, what are people thinking about, who's actually getting this done, and how might this shift in the next administration, and what are sort of the key things to be watching for. So thank you for spending time to do that. I think there's a slide that will come up on the screen at the end of our program that will provide you the contact information for the presenters today. If people who watch this have questions that come up after the program or down the road in the next couple of months, as you field questions about this from your internal business people, please don't hesitate to reach out to us. If it's a tax question, call Liz. If it's a policy question, please call Christine. If it's an environmental question, I'm always available, and certainly other colleagues in the Environment and Natural Resources Group are available as well. So thank you for spending the hour with us. I hope you'll join us next week for the final installment of the Fall Environmental Seminar, which should be a really interesting discussion about how infrastructure, and to a large extent energy infrastructure, is expected to evolve under the Biden administration, and have some key insights from several of our partners, including Kevin Ewing and Navarro. So look forward to connecting with you then. I hope everyone is safe and healthy and well. And thanks again for joining us. Have a good one.